Hey, I'm Chris Parrish, Chief Investment Officer with Oak Harvest Financial Group. This is our investment team's midweek release when we examine a news item, headline, or news story making the rounds from publicly available sources and ask, is it news or is it noise? Before we continue, please take a moment to hit that subscribe button and the notification bell will ring so you will be notified when we upload new content. So here we go. Okay, viewers, I know it's early, like really early. In fact, it's almost a year off. What is the it I'm talking about? Yes, viewers, it's the midterm congressional elections way out next November. Clients, long-term listeners, and my friends and family know I hate talking about politics. Why? Because first, I'm not a political person, and I hate the games that are played in political circles. More importantly to listeners, I hate discussing politics because often the conversation quickly moves to one filled with emotions centered around social policies or unquantifiable topics. Things that are hard, if not impossible, to measure and quantify with hard data. Well, listeners, I imagine with the reach and power of the TV news media diminishing year by year, they and other media outlets will once again be doing their best to stoke voter and investor emotions throughout 2022, particularly during the very normal, economically seasonally slow second and third summer quarters of next year. Investors, this is Oak Harvest's first early attempt in advising you to do everything you can to tune out the upcoming noise and political rhetoric surrounding the 2022 midterm elections. Try to shut it all out of your investment decision-making process regardless of which side of the aisle you fall. Yes, statistically, the midterm year, or year two of a president's term, is the worst year for the S&P 500 in the four-year presidential cycle. However, that doesn't mean it will or should be a down year for your equity investments. As we have discussed since the summer of 2020, pre-presidential election results, regardless of president, the first term of all presidential cycles show a November year one into April year two rally. The last 12 months since President Biden was elected have been as normal as it gets for those following that cycle. After that first quarter in year two, which is this case would be, say, March or April of next year, the market risk rises for about 6 months, mid-year, pausing with higher volatility within a secular bull market. This cycle suggests that the first correction of about minus 10% is possible from higher levels of the S&P 500 during 2022, during the first half of the year. However, starting late summer of 2022, right around when the election noise will most likely be at its greatest and the economic growth at its slowest, the presidential cycle enters its most bullish period of the four-year term. That period usually begins just prior to the November midterm elections, just like the lows in October of 2020. The subsequent rally has the potential to last throughout year three of the cycle. In this case, that would be 2023. This is regardless of who wins the November midterms. This pattern for the coming year is entirely in line with our first half 2022 outlook released a few weeks ago under the title, Curb Your Enthusiasm Leads to a Bull Market Buy. We'll be reminding our clients this throughout 2022. Does it matter that I personally think that the midterm elections will be a complete wipeout of incumbent Democrats and the GOP will gain back historically large number of seats in Congress? No, it doesn't one bit. And I'm sorry, viewers who support the Democratic Party, that is what the data says. No, it shouldn't matter to the markets. Just as time and time again, I counseled clients and prospects at Oak Harvest throughout 2020 that our work said that the markets would not blink if President Trump lost the 2020 election and if there was a Democratic blue wave in Congress, each of which happened. Why? Because that is what the historic data has said. And the Federal Reserve's monetary policy matters more to the financial markets than who or what political party is governing our fabulous country. Listeners, I believe that your financial advisor or the people managing your money should be a fiduciary for your money. Ask them if they are. What that means is that their primary concern should be for the long-term investment returns of your portfolio versus your individual risk profile, goals, and time horizon. That underlining priority doesn't change with who wins or loses an election in Washington, D.C. As CIO of Oak Harvest, my job is not to make social, ethical, or political judgments on behalf of our clients. I will repeat this belief until I retire. My first and only job as a fiduciary is to do the best I can for all of our clients, seeking the best return possible while adhering to your risk profile. And viewers, that job description, the one of a financial fiduciary, is politically agnostic to the noise of an election cycle. Give us a call here at Oak Harvest and ask to speak to one of our advisors. Let us help you craft a financial plan that meets your retirement goals and needs first and your greed second. Call us here at 877-896-0040. We're here to help you on your financial journey into and through your retirement years. Many blessings. I'm Chris Paris, and from the team here at Oak Harvest, have a great week.